Hey everybody, it's me, Gregory Mannarino. How are you today? It's Wednesday, July 18th, 2018. Wow, a lot of stuff I want to talk about. Let's start off with some basic stuff. As I am doing this video blog, stocks aren't doing much of anything. Kind of at the flat line. I think the Dow was positive. The other indices were slightly in the negative. They are buying bonds right now, as usual, to try to prop this up. Go look at it on my website, traderschoice.net. I mean, it's nothing dramatic yet, but it will be. They will not allow stocks to fall. Don't worry about it. It's the truth. The dollar is the fly in the ointment again. It has gained strength here. Believe what I'm telling you. They do not want to see this. Meaning the President, the Federal Reserve, they have promised to create inflation through any mechanism possible. Okay, we got that down too. But we got to keep our eye on that. The stronger dollar is pressuring, no, it's more like hammering metals again as I am doing this video blog. It's an incredible dynamic here. It just doesn't stop. They pound and pound and pound and pound at it. And it's frankly disgusting but predictable. I said this in the video I did Saturday that gold and silver were going to fall under pressure this week, and that's exactly what's happening here. How many of you out here, and this is quite amazing in my view, caught Larry Kudlow this morning talking to Kramer on the Seeking Alpha? Kramer, to his credit, brought up the yield curve. He seemed a little concerned about it, but Larry Kudlow, of course, he's blowing it off. Not only is he blowing it off, he's saying that people need to be looking in another spot. Now, if you recall, the mainstream financial channels are saying, or trying to fist feed you, that you need to be looking at the 2 to 10 spread as a predictor of recession. You and I don't give a flying anything about recession here. It's this overinflated bubble stock market that's the problem. Larry Kudlow is saying, no. Don't look at the 2-10. You got to look at the 3-month 10 spread. Again, it's look here, don't look here. They won't even mention the 10-30 spread, which is what I look at. The 10-30 spread was a leading indicator for the last two stock market meltdowns, the dot-com bubble and the 2008 housing credit bubble. We're in a larger credit bubble now, and housing bubble now, and stock market bubble now than we were then. But again, don't look here. Make sure you're looking over there. And Larry Kudlow is playing right into this. It's incredible. But that's just the story here, people. It's the same thing over and over and over again. Cryptos are catching a bid again. Good for them. I'm happy. I own them. You know that. I am not adding to my positions. Now, I want to see if this is real. It's not like they're going to go away anytime soon. So, there's nothing wrong with sitting back and just taking this all in. All right, so here's the scenario. Let's summarize real quick. As I am doing this, stocks are kind of mixed. Nothing major going on here. They are buying up those bonds to try to keep this propped up. The dollar is the fly in the ointment here. Metals are under pressure. Crypto's catching a bid. And it's the same thing. Look here, don't look here with regard to the yield curve. Oh, one more thing. My goodness. PIMCO, the world's largest bond fund, this morning, despite what Larry Kudlow said, is warning people again about the yield curve, saying it's something people need to be looking at. And they're also saying that the Fed is going to have to stop, despite the fact that Powell, who's again testifying today before the Senate Idiot Committee, besides him saying that they're going to continue to, aggressively raise those rates, which we know they're not doing, the Fed will have to back off. This is the largest bond fund on earth. So anyway, I think that like PIMCO and Kudlow, interesting, they are at odds with each other here with regard to the yield curve. All right, with that said, I will see you at the end of the day.